I think you've got some very big and important sectors that have gotten us here, and it's not all tech. Consumer discretionary has been very important. REITs and utilities have been very important. And I think now you've got these other sectors where you say, okay, are they going to bring up the rear? Or is there going to be a rotation at these highs where maybe even if we pause, that sustains us? And is it going to be energy? Oil's having a huge day today, for example. It's geopolitical. It's not economic, but whatever. What I find interesting is two things that maybe not a lot of people have been mentioning. Massive gold rally, and that is now a legitimate gold breakout. This is 5-year highs for gold. A lot of people are talking about that. What is the meaning? Is it purely on what's going on with the Fed? Are there some other issues in there? The other thing is banks. The KRE is down 1% today, and half of the 20 worst performing S&P 500 names today are banks.
Worst day of the month for regionals.
Yeah. So, look, it's not like, oh, no, everything's bad, but we've been selling since the open, pretty much straight up selling, and now we're closer to the low of the day than we are to the high of the day, and you've got no participation whatsoever from the big financial firms. And I think you combine that with the big gold rally, and you just say to yourself, is this going to be a replay of last September where we barely peak out, make a new high above the old February 2018 highs, and then they pull the chair out from under our feet?
That's a good point. So, Meghan, how do you answer that question?
Yeah, we think that the stock market may be a little bit ahead of itself, probably has gone almost as far as it can go on the Fed alone. What we're interested in is a bit of a bifurcation in the market, or mixed signals, if you will. So interest rate markets are signaling a very pessimistic scenario with basically 3 25 basis point rate cuts before the end of this year, so in the next 6 months. Whereas the stock market, on the other hand, is hitting all-time highs, and we think is pricing in a soft landing engineered by the Fed. So that might happen. For that to happen, we need to see growth pick up a little bit, and we think that trade needs to be something that comes to clarity.